everyone. Thank you for joining for today's webinar. I'm Kylie from WTIA. WTIA is a non-for-profit political neutral trade association dedicated to the wireless and mobile industry. We act as a platform, an aggregator and community for industry professionals to learn and develop emerging technologies and standards. Today's webinar is the third one under the NFT FinTech Metaverse series with topic Decentralized Finance. You are your own bank. We will cover how DeFi has changed our way of banking, legal and security issues around Web3 and NFT, cyber protection, and the insurance of cryptocurrencies. And now I would like to welcome our speakers today. Mr. Dominic Wai, partner of ONC Lawyers. Mr. Anthony Ma, CEO and founder of Hope Light Technology Limited, who is also the executive committee of WTIA. Mr. Laurent Charlier, managing director of Claimer Risk Solutions, and our moderator, Mr. Donald Chen, vice chairman of WTIA. We are so glad you could be here today to share your insights with us. Before starting our workshop, I would like to invite Mr. Anthony Ma, Executive Committee of WTIA, to make his welcoming speech.
Okay. Thank you, Kylie. Good afternoon, Dominic, Laurent, Donald, and WTIA members. So this is a great honor to have this time with all you together to discuss about this important topic. This is our first webinar on NFT and on FinTech's Metaverse series. Each of our two previous webinars has drawn over 100 attendees, and I think it's a great success. So hopefully this session again will build on the momentum that we have. So DeFi is now a standard or a trend that everyone is know about it. But as we know, every coin has two sides. In the last two series, we talk about the opportunities, the payment mechanisms with DeFi and cryptocurrency. And this session, we will focus on how to protect it, how to regulate it, and what are the rights on the legal terms. And I think this is a going important part. We are seeing more and more cyber attack or phishing or scams that are affecting individuals who are new to this NFT, crypto, or metaverse investment asset. I hope with the presentation from Dominic, Laurent, and the group, communities participations, we will be able to help ourselves be more vigilant and to know how to protect our virtual assets. So it is my great privilege to have invited the renowned speaker from ONC Lawyers, Dominic, who is going to share about his views on legal contracts. And Laurent from Claimer Risk Solutions. Laurent is a great fan, and he has a lot of experience in designing and implementing risk solutions using underwriting and insurance coverage. So all the valuable insights hopefully will help us together and be more successful in our journey to the next decades of development in decentralized finance and make Hong Kong a successful landing ground for all the innovations in blockchain, DLT, and all the, I would say, founders and entrepreneurs in a community with success. So now, without further ado, I pass time to Dominic. Let him kickstart with his presentations. Okay, Kelly, you have.
Anthony, we will start the group photo section first. So I invite Dominic, Laurent, and also our moderator, Donald, and also our executive committee, Joseph, who helped us a lot on the NFT Metaverse FinTech series. So I would like to invite all of you to take a group photo together. Yeah, my colleague will have to capture the moment.
Okay.
So, Oh, I saw Michael. Oh, okay. So I think our colleague, yeah, captured the moment already. Thank you. So just a little housekeeping before we officially get started. If you have any questions during the presentation, please type them into the chat box. Our moderator, Donald, will bring them up during the panel discussion. So now, without further ado, we will turn the time over to Dominic. Dominic is the partner of ONC Lawyers. He will be sharing on legal aspects of NFTs, intellectual property, and copyright.
Thank you, Kylie, and thank you, WTIA, for having me. Let me just share the screen. So you can see my, I hope you can see my PowerPoint. So these are the our social media sites. And now today's, for my part of the presentation, and actually I think here are included some points that we will be discussing in the general discussion session. Some of the questions that it might be in your mind already, but of course, if you have any questions during my presentation and the other panelists' presentation, feel free to type it in the chat box and we will try our best to answer them. Now, non-fungible tokens, NFTs, are quite hot these days, but what do you really get when you acquire an NFT? I think Donald asked me this question when we were preparing this session. Can you use the NFT that you have bought and printed on your shirt? Is there any chance of recovery for a loss of crypto, stolen crypto, or rug pull? And how safe and secure is buying a virtual item, for example, land in the metaverse? So we'll try to get into these questions and come up with hopefully some at least ideas, if not answers. Now, I have to say that we might not actually have any answers yet because all these, as you know, are still developing and a lot is going on very quickly. So for the first thing I would like to share with you is on quite actually hot off the press, so-called, a decision from Singapore just last week. Now, this decision relates to an NFT, a digital asset. And actually, this is claimed to be the very first legal case, considering that a digital asset, an NFT is a digital asset. So last week, the Singapore court issued an asset freezing order, what we call an injunction in legal terms, preventing the sale of a quite well-known Bored Ape NFT from being able to be sold. Now, as I say, this is considered to be one of the very first cases of its kind in a court, considering NFT's legal status as a digital asset. Now, the background of the case is this. It's based on a report that I've extracted. Now, the claimant is a Singapore citizen who is an active dealer in crypto and digital assets, and is a frequent borrower on a site called NFT-Fi. Well, I suppose since we are talking about DeFi, NFT-Fi is probably another acronym to use NFT as a kind of security or collateral for use as lending and borrowing of funds. So according to the case, this platform allows people to use NFTs, if you have already owned an NFT, as a collateral for crypto loans. And the defendant, whose username is as set out in the PowerPoint, but it's just a username, but the identity and physical location are not known, and is a frequent lender on the platform. Now, the claimant in mid-April asked for a refinancing of a loan for which the NFT in question was being used as collateral. But after some back and forth, the defendant lender gave a short time frame in which the loan could be repaid. So what happened is that the claimant in this case has bought a NFT, and this NFT was used as a collateral for borrowing some crypto through this platform, and it's kind of matching the two. So in a way, it's DeFi, right? You don't need to have any in between for this kind of financing. And but in this particular case, the report of the case states that actually there have been some discussion as to the repayment time. Now, of course, we probably all of us have the experience of lending money or getting credit. So you need to have a repayment time, and sometimes that can be extended, and of course that's subject to discussion amongst the parties. So even if there's in the old ways of a legal contract, that contract can always be amended or changed depending on the consensus of the parties. So in this case, it seems that there have been some back and forth discussion, but then the time that has been given for repayment was a very short time. And what happened was that the claimant was not able to repay on time. And so the defendant foreclosed on the NFT. Now, foreclosure is a term that means that actually in a loan situation, if you have a underlying asset as a collateral, even though the legal title might have been changed to the lender's name, the borrower with that asset can still have a right of redemption to get back the asset if the person is able to repay on time. However, if there's a default, the lender might be able to extinguish this right to redeem and so-called foreclose the asset. So this means that according to the arrangement, which is under a smart contract, it seems that once there's a default and there was no change in that particular aspect, the smart contract will automatically kick in, and the lender is able to take the NFT, which originally is supposed to be just a collateral, but now it becomes the lender's property. And of course, in this case, the claimant said that, well, actually, when he tried to use this as a collateral, this BAYC NFT number 2162 is one of his most treasured possessions and is irreplaceable to him and had no intentions actually to ever part with or sell it. So he was just trying to use that to raise some funds as a collateral or a security, and it's never intended to part with the asset. And he just used this so valuable NFT as the collateral to borrow crypto because due to its rarity and high value, he could get larger loans. Now, but of course, there was no payment. But then it seems that the claimant is saying that, well, actually, my intention is not maybe taken into account in terms of this loan. And that's why that the NFT should not go to the lender, even though there might be a late repayment. So the claimant is saying that the lender might have been unjustly enriched. Now, this is, again, a legal term that I won't have time to go into details, but it's essentially saying that the other party shouldn't be enriched unjustly. So in a way that the claimant is saying that, well, he should have just got back the repayment of the loan plus interest, but that amount must be much, much lower than the value of the NFT. And so the lender should not have got the NFT, which is so much more value than the loaned crypto. And in this case, the party went to the court, and the court was able to deal with it and made an order to freeze the NFT. And of course, in this process, the court has to consider whether the NFT is something that can be frozen as an asset, like a piece of land or money. And so it seems that at least at this, what we call interim interlocutory stage, the court in Singapore considered that this particular NFT is a digital asset and can be frozen pending the parties to resolve the dispute in ownership. And it seems that, at least according to this case, and it might be actually applicable in other common law jurisdiction, because Singapore is a common law jurisdiction, and Hong Kong too. At least there's now a case precedent saying that the law does recognize both fungible and non-fungible tokens as a form of property to which court injunctions can attach. And the NFT case is a consistent application of this same principle. So even though there have no precedent, no prior cases concerning what is an NFT, now this case saying that, well, fungible and non-fungible tokens is a form of property, and so that can attract the protection of a court injunction. And the court recognized that an NFT is a valuable property worth protecting, and therefore, since there's a dispute, pending the resolution of this dispute, that property should be preserved. And this digital asset is something that is valuable, and people invest in it, have rights that can be protected. So we can consider a discussion later on today. For example, what could be the future of this kind of dispute? Could there be a dispute over ownership of virtual land? Now, if there is a dispute on a piece of virtual land, maybe then a similar kind of application for injunction can also be applied over on the blockchain. So it seems that the court and the law is, they're always slow in terms of catching up with technological development, but seems that the law is, at least in Singapore, they are also very in line with what's happening in the world. But of course, another point that is interesting is that originally, if one used the DeFi concept, that is supposed to be self-executing in terms of all the smart contracts in the transaction. But now it seems that still people are able to say that because of some dispute, some arguments in whatever aspect, maybe it's in the ownership, in the rights to the asset, then they can still use the old way of getting someone or the court to intervene, and in a way to stop the automatic self-execution of a smart contract. Now, turning to what would be the future? So what would be the appetite of maybe the regulators? Now, of course, the other panelists might also speak a bit on this, but I would just like to share two kind of views, one locally and one internationally. One of them is from our own Investor and Financial Education Council, 投委會. This is a government-funded institution that helps people to be smarter in terms of investments. And in terms of cryptocurrencies, they have this to say. They consider that cryptocurrencies are regarded as highly speculative and high-risk products, and is therefore not suitable for everyone. Maybe they're saying that is probably just suitable at least for geeks. But even for geeks, I'm not saying that I am one of them, but even for geeks, I think that there might still be some difficulty, at least at this stage, in terms of investment or using DeFi for financing. And of course, being a kind of regulated role, now they are of course not the regulator, they are trying to educate people in terms of investments. And of course, these things, as the Singapore court has mentioned, NFT can be a valuable an asset. So people have to be careful. Now, without fully understanding the feature and risks, do not jump on the speculative investment bandwagon. And of course, that's the kind of classic way of saying that you need to be very careful and understand what you're investing in. It's not just like the new kind of things, even in the old kind of things like commodities, shares, gold, anything that that could have a value fluctuated, then of course you need to be careful. But of course, during the for cryptocurrencies and NFTs, that might be more that we need to be careful. And they have this kind of graphic saying that the possible risks. Now, of course, our fellow panelists will talk about other risks, particularly Laurent. But one of there are a few risks that have set out here by the IFEC. Price volatility, I don't think I need to mention that for the last few weeks. Everyone knows what happened about all these cryptocurrencies. No guarantee of backing, that's the point, right? It's DeFi. And bubble risk, if it is a bubble, depending on the kind of token, that might be, hyped as a very potent kind of investment tool. But then be careful, that might be a bubble. Hacking risk, Anthony might talk a bit more, but of course, there's always that issue of what if your crypto either is on a hot or cold wallet is lost. Exchange platform, there might also be issues with whether the exchange themselves are credible and it's of good intentions. Wallet security, again, Anthony will talk about liquidity risk, illegal activities. You might, what if the crypto is involved in actually some illicit activities. Now, if you're talking about fiat currency, currency that have been touched by, say, for example, terrorists or money laundering, there might always be issues when people are tracing those funds, even if it only passed through your bank account. And that's my experience in terms of dealing with or helping clients to deal with money, fiat currency that went through their account, even though it's long gone, but because it has been touched upon by criminals and considered to be crime proceeds. Even if the money went through your bank account, you might be subject to investigation. So what about crypto? That's always possible, right? As I understand, it's on the blockchain. So the record is there. And if law enforcement traced that and it went through a certain wallet, then that person, if they are able to trace that person, might be a subject of investigation. And then, of course, the emerging technology, whether the technology can support what everyone is trying to say that they will achieve. That is something that, again, maybe on Anthony's part, he will talk more on that. Apart from cryptocurrencies, the IFEC also mentioned about NFTs. Again, they consider that, especially on the price, is highly volatile and can hardly be assured of their actual value. And in terms of that, I think Laurent will mention a little bit on, because if you are not able to assess their value, then that would be an issue of how you're going to put a price as premium to ensure that. And buying and selling, of course, there's always risk. And also, I'll be talking a bit more on the rights of an NFT. And another view I want to share is just very recently, I picked it up online, European Central Bank President Christine Lagarde. My very humble assessment is that cryptocurrency is worth nothing. It is based on nothing, and there's no underlying asset to act as an anchor of safety. And it seems that even with some coin that they said they are backed by assets are still having trouble. So they're calling for greater regulation over what she described as highly speculative assets. Now, of course, this is a view from Europe, but as you may know that regulators around the world, and of course, Hong Kong as an international financial center, we do follow, or these regulators have discussion. And if one person say that it's something that should be regulated, now others might follow. So this might be actually an indication of a trend that is coming. And I just want to say that, well, what about the risk? And in terms of, this is one kind of capture that I got from certain warning when one tried to buy a piece of land on Sandbox. And of course, there are always this issue of risk and hackers and also scammers pretending to be from the exchange or the platform and trying to just con you into giving them your valuable things or personal data. But in terms of even all these warnings, it's quite difficult, actually, in my view, for people to be very vigilant and cautious. So that's add into the whole mix of uncertainty, high volatility, and also a lot of risk in terms of, are you talking or discussing with the right party in terms of making a purchase or giving some data, exchanging for crypto? That is something that I'm not sure, maybe in the future there will be some more improvement in terms of this kind of support and user interface. But as a kind of layman looking at these, it is not easy to really try to be careful and cautious. And just very briefly, I want to talk about NFT. Now, NFT, these few points, I'm actually not an intellectual property lawyer, but based on what I have come across, this one is actually based on a very good podcast by Laura Shin. She's a journalist that covers crypto. In the podcast, it mentioned about NFT rights. Now, actually, within an NFT, there could be some different kinds of IP rights. For example, that could be a copyright. The person that have authored or minted the NFT, that would have the copyright, and that's the creator. Automatically, you don't need to register or file anything, you would get this copyright. And this kind of right can be commercialized and can be transferred as a kind of tangible right, like a piece of asset. So this right can also be transferred through a contract or a license. So that is governed by contract law. But then again, of course, when you talk about law, one thing is that, which law are you talking about? Are you talking about Hong Kong law, or maybe even mainland China law, which is already different because they are what we call civil law. Civil law is codified law that might not be the same in certain aspects. And apart from copyright, there's also the trademark. The trademark is through a mark that indicates a source of origin. So in your art, digital art, you might have something that is originally created, but then you might add in something that's already a trademark that has been registered by someone else. And that trademark, of course, again, can be used or licensed depending on certain arrangements. And then that under some jurisdiction and law, there's also the right of publicity. There are also other rights of image. For example, that attached to certain celebrities, personalities. And so when you own or possess an NFT, it's not the same as the ownership of the copyright in that NFT. So a person can transfer ownership of the copyright to an image along with an NFT, but it is not necessary to do so. So for example, it's like buying a copy of a book is not the same as buying the copyright of a book. So you need to be careful what you're buying. Are you buying the ownership including a copyright or not, or you just may be allowed to use it under a license? And that, of course, would affect, if you want to on resell that, what kind of rights actually do you own to resell to the next buyer, which if you actually don't have the right, but you thought you have the right and go into a contract, then you might be in breach of the contract and being sued by others. And so the purchaser can acquire certain IP rights, but it's entirely depend on the contract of the NFT. So where's the contract? What are the terms of the contract? Is it easy to be located and look into the terms? So if it is under a smart contract, is it part of the platform and then inside the NFT? So these are things that for an owner, you might want to look into in terms of assessing what kind of IP rights you have. So buying an NFT means getting a token that shows ownership of a digital asset that is reported in a ledger, and the rights that are explicitly given to the purchaser in a contract. But if you think that you're buying that and it includes everything, that might be not the case. Secondary purchases in terms of resale, one of the major issues is how does that initial license grant travel with the NFT? There might be some limit restrictions on further license or further transferring that right of usage. Sometimes it might be a case where the secondary purchaser can use it if it is not for commercial purpose, or there might be some restrictions saying that if it is for commercial purpose, then you need to do certain things, or you might need to actually pay royalty, right? Under a license, that is the thing that you might need to actually pay or share certain of your profits. So one caution is that when you get the NFT, which is minted on the platform, then you need to look into the whole setup and the deal, because the terms and conditions of a platform and the terms and conditions of an NFT project might not be the same. So that covers my part of the presentation, and I will further discuss when we go to the panel discussion. Thank you.
Thank you, Dominic. And now we would like to move on to our next guest, Anthony. Anthony is the CEO and founder from Hope-Led Technology Limited. He will be sharing on cryptocurrencies and digital assets. Insurance. Anthony.
Okay. Thank you, Dominic and Kelly, for this session. Let me start with the sharing of my slides. So the one thing that I remember most is from Dominic's dissertation is about the bubble risk. That one is a new term. I mean, that I learned today. But yeah, we'll discuss that. So I guess the screen is showing okay. Kelly, is everything's fine? Right. Okay. So hello everyone. I'm Anthony. So we are from Hope-Led, working on cybersecurity protection. So mainly it is in Hong Kong, we built our own software product and helped SMEs and firms to defend all the ransomware and phishing attack. So this is our corporate vision, that we make total security possible, meaning that currently there are a lot of new risk, zero-day attack. These things are extremely, say, difficult and take a lot of manual work to defend. The way that we work is different. This is our website, so you can take a look and see how this is different, and would happy to share, and chat with all of you more in the future. And back to this topic, I wrote about blockchain a few years ago. I think in this session, I'm not going to go into the basic, but I was strongly advise the audience to be able to explain blockchain to your family or to your friends. If you're not, be curious and to learn more about the basics. This article that I wrote is for people who like to know about the basic of blockchain. Now with NFT, there's a lot of new team or new people joining this crypto revolution. But I would suggest you to be curious and to know more about the foundation, how blockchain work, how DLT work. So I won't repeat the details here. If you have time, then please do. And there's a lot of YouTube videos explaining DLT. I strongly advise everyone when you invest or trade or pursue a new career, do a good foundation first. So when the panelists was discussing about Web3, the first, and with my experience on trading and using different wallet, the experience is that it's clearly a missing element in the crypto world is the pillar of defense. This pillar of defense, when I was working in the banking sector, it is the de facto standard that when we design our risk management framework. So the first line of defense is on operating, mainly on efficiency. Okay, it's like how to reset the password in a timely and accurate rate. The second line of defense is mainly tracking. Make sure that the first line is doing the work correctly, timely, and with keeping good records. So the second line of defense in the banking environment is usually the back office, the risk management team, the compliance team. And the third line of defense, which when I was in banking industry, I was with the internal audit. So we are looking at the first two, and make sure that their divisional labor, their working mechanism is aligned with banks' policy and Hong Kong MA's requirements. When we come to crypto, and when we see how the different, wallet and so it is really a tech-driven, innovation-driven concepts. So I currently do not see this field of defense structure being presented in the white papers or in the governance model that are developed by some of these crypto enterprise. So I think this is part that on the risk management side, there is a new, or if some of these advantages of a field of defense can be embedded into the crypto world, that will help regain the confidence and be more, I would say, risk averse on the crypto. So with crypto, what I myself focus on and would like to share is the token economy. So in the past, before there is crypto platforms, it's rather difficult to exchange value between, let's say, me and Dominic or Donald. The challenge is that if we want to exchange some value or opinion, or let's say I'm trying to use the Wi-Fi from Donald's mobile phone, to the accounting, the payment, the exchange value is overly complex, and the transaction cost is very expensive. But with crypto, the micropayment side, we can see that you are able to charge on different type of value exchange. One example in Hong Kong, there's Go Kin, one of the Hong Kong founder who built a coin called Litecoin, is able to capture the value of an article, the author of an article or a web blog post is able to capture the value of his audience or his readership. So that part is being made possible with crypto and blockchain. And the future of all this is meaning that everyone would be able to provide value to the systems. One part is the other example is Filecoin. Everyone can contribute their storage, kind of sharing their capacity of storage and helping the community to provide this service for those who need a particular of storage requirements. So this is a kind of a thing that currently happening, and the DeFi is actually built on the infrastructure or the helping to provide the liquidity on all this token economy. So the token economy is the foundation for the DeFi to be built on. So the token economy about the value creation, the pricing, and the buy and sell of value is what we are seeing now. Everything or most of the thing can now be digitalized, and we can exchange and share store values using crypto. So this is the thing that creating a new method or a new trend that's opportunities. The panelist has discussed that when this will become, I mean, a wow adoption. My personal guess is it will take quite a long time, because the technology is still evolving, and to have mass adoption, it requires a lot of, I would say, education. People are not really ready to put all their storage or their mobile plan on a decentralized network. So, but with the say innovation at NFT, we have seen some value being unlocked. So this is an example from Wall Street Journal. There is an NFT issued by a group of hotels. So the hotels, instead of selling room, they're selling an NFT to the guests, and the guests is able to trade this NFT to other people. So the relationship between you and hotels is changed from you are a guest to a particular room, to you are a owner or particular right to stay in that hotel, and you can buy this right, and then you can resell it to another person. It makes so the hotels don't quite worry about who is going to stay, as long as someone already paid for that price of the room. So NFT is able to create or unlock the value. So before that, this value is being, I would say, controlled or centralized by the hotel group. So this type of value creation is what we are seeing now with DeFi. And the value creates, okay, so now if you are the owner of an NFT, then you are at risk, because you yourselves owning this NFT, meaning you're owning some valuable assets on your wallet or on your computer or on your mobile. So these are the risks that we are going to see. People are more coming to targeting you, because we are saying that the hotel gives you the NFT. So now your wallet has, or your digital wallet or your PC now becoming a value storage. Okay, so it is worth some money, because in the past you lost the PC, the photos or the physical, but the cost to you is mainly maybe some of the photos or the physical device replacement costs. But now the PC is the value storage. Then the ransomware, the cyber attack is more, I would say, prevalent and targeting you. So we must stop the ransomware attack before it starts. Okay, so in this diagram, we're going to try to show you that there are many steps before attacker is able to compromise and take control of your computer. The initial access, I mean, we must stop that. That is the entry point for attack to be successful, and we should focus on stopping them from entry. There are other technology, other companies focus on the later part, which is called threat intelligence backlist, which are more focused on when the malware, when the cyber criminal is already get into the network. After the computer is being infected, they try to detect it. So it is, the banks are doing that, but it is not for individuals. So this type of initial attack usually happen in the browser, meaning that we have seen a lot of different type of exploitation using the web, because people spend time on Facebook, on forum, on WhatsApp, and when you receive WhatsApp, usually there's a link or image asking you to click on it. So these are the more of the scam and everything is focused on the browser and exploiting the weakness of the browser. So this is one case just happened 3 days ago. So this gentleman has been with crypto for some years, and he lost around 150K US dollars for 51 ETH because he installed a fake or a malicious add-on on his browser. So the whole story is quite interesting. I mean, I encourage you to follow him and then to get to know how this whole I would say scheme happens. So he had been invest from his own statement for 5 to 6 years in the crypto. In the last 5 to 6 years, he had seen many of scams and seen a lot of phishing attacks. So he is able to, I would say, avoid or outsmart the hackers. But the 6th year, I mean, finally he got caught in this situation. So I think even you are smart, even you are vigilant, you are risk aware. I mean, sometimes the criminals just caught you in a different way. So there is a lot of, I would say, phishing SMS or emails. So we do a study in our own firm looking at a phishing SMS, and we try to study how this website is doing, and then we click on it and going to understand how the hacker is doing. The most obvious thing is that we receive an SMS from this MetaMask mobile.io. When we open this link on our PC, it straight to Google. So it is a benign website. There is nothing special. It just directs us to Google. But when we open this link on a mobile OS, then you will show the fake MetaMask wallet. So it is rather difficult to detect this type of new phishing emails. And that's why when we check with 4 vendors, Palo Alto, WebFilter, McAfee, Symantec, all is not able to detect this as a phishing attack, because when they use their engine to scan this website, it go to Google. And obviously Google is a genuine zero risk website. So they were thinking that it's nothing special. So that is the worst part of all this technology. They are just use traditional PC as the web browser. I mean, but the hacker is already outsmart them. The hacker know that when you use a PC, you're not likely to be, I would say, the real victim. So they will send you to Google, but when you open it on your browser, it is showing you the fake website. So I think this is important for all of you that don't purely rely on cybersecurity tools. Those are sometimes is not that accurate. So in the cybersecurity world, when you come to Metaverse, you are your own bank, meaning that you have to protect yourselves. You can't just rely on your vendors, the wallet, or everyone else, because it is your own asset. Your computer is now a value store, and your mobile is storing the values, and it is more than, and the hackers are following you on you. So in here, we try to explain to you that when you do a wallet transfer, there is a lot of, say, technical design fault with a MetaMask wallet transfer. This wallet transfer assume that you are machines. You can look at all the numbers when we're showing here is hash value. It's rather difficult. There's a new trend I would just go for. There's a new trend of a EIP 712 is able to structure the hash value into a more meaningful representation. So you can see down on the right-hand side of the screen, there's a from person to person, Alice, and there is the wallet number, and there's content. So EIP 712 is something that you should look for when you using your wallet and using a new token, because if they support that, it's likely that they put user first, not the technical guys, and it is important that this standard is getting more popular and will help and benefit the whole community. So the time is quite around, so I will talk about just, the wallet. So there's a different type of wallet that in the market, or when we want to store the value, there's hot wallet. Okay, so I think this slide later on we will share it to everyone, so I won't discuss each of the details. Okay, so currently cold wallets and even hardware wallet is quite popular because it is less likely to be under attack, but it's not user friendly. Okay, so it is a rather I would say time consuming to all those, and if you want to do trading, all this is actually hinder your trading I would say efficiency. So what we suggest, or what I might personally do, is use a poolman's wallet. You can create your own wallet. If you have some technical knowledge, I advise people to follow, or to at least invest in a way to manage your own wallet. This one I suggest is to use a old iPhone that you yourself own. Don't try to buy one. Just use an old iPhone or any phone, smart Android phone, and erase it and install a basic minimum OS update. And do not use any Facebook, WhatsApp on the phone. I mean, make it clean and simple. And more importantly is that you should connect the phone to a segregated, isolated trust network. It shouldn't be connected to any of the internet over, I would say, 4 billion IP addresses. It shouldn't, because it is just for one purpose. It's to store value to do transactions. If the purpose of this phone is just to do one thing, or to help you to transact, then you should connect to only those websites. So the DNS whitelisting that we are providing is something that is helping you to control the phone that only connect to addresses that is useful for your transactions. Okay, you shouldn't connect it to a Facebook. Okay, and it reduces the risk of getting, I would say, phishing or malware to install on your phone. The second part about using an old phone is that there's a lot of physical security kits. The one that I saw in the photo is from Amazon. That is only $16 US. Then you can protect your phone. There is a variety of different options. Depends on how you like to store this phone. You can store it in your own apartment, on your car, and this means that you're not limited to what the vendors is providing. So you had a different option to protect your phone using the physical security devices. So in here, I explain that once you isolate the network, make sure that your phone only connect to required transaction-oriented website only, and then you have the physical lock, which is tailor-made to your own personal users. And with most of the modern phone, you have the biometric. So all three type of protections to give you a certain protection and security that you can use your wallet. Okay, but it is a hot wallet. It is connected to the internet, but it's still cold because it is not on the hackers or not connected to the whole internet. Okay, so this is one concept that I think everyone should study it. There are physical, hardware wallets in the market. I mean, they cost about $100 US to a few $100 US. I would suggest you to consider put that money into the insurance part, because if you are able to buy insurance to protect your wallet, the insurance coverage is usually 10 times or 100 times of your policy coverage. Okay, so that part, I think I will pass it to Laurent, who work with us closely on cybersecurity insurance, and we actually help a lot of clients on the insurance part of their business. So it is very important that you have spend the money wisely. Hardware wallet has its limitations, so you can build your own wallet, use the network isolations, and put the money in the insurance part. The next part, I think I will, on the insurance, I will pass it to Laurent, and he will explain the insurance domains, and you can discuss all the comments in the sharing sessions. So I'm passing to Laurent.
Thank you, Anthony. I will wait for you to leave the screen. Okay, so I will share my screen.
Okay.
Just a minute. I mean, maybe Kylie wants to add something, or Donald, or should I go?
Time for your sharing.
Okay, okay, so I'm sharing. Just a minute. Okay, hopla. So I think we are okay. I think you all see my screen.
Yep, that's
That's
great.
right. Yeah. Thank you so much. Well, first of all, thanks a lot to the WTI Association to give me the opportunity to share some insurance knowledge. I'm the last one of this presentation, and I will try to keep my 15 minutes, and I put my my clock to make sure I will not go over this 15 minutes. Thanks a lot, Dominic and Anthony, as well for what you have said. So, as it has been said, I will talk about mainly risk and insurance. Just a few words. So, Klema Risk Solution, it's an insurance broker. So we have offices in Singapore, Shanghai, and Hong Kong. And our main role is to advise our client, of course, and it's to design their insurance program, and it's to manage it. Our clients are mainly businesses, and lots of them are in the IT or tech business. So we do lots of crime, cyber, and professional indemnity insurance. Personally, just a minute. I'm French, so I want to excuse myself for my strong French accent. But sorry, I'm not doing that on purpose. Today, my presentation will deal mostly with crypto. I mean, only with cryptocurrency. Dominic has dealt with NFT. Me, I will deal with the other digital asset, which is the cryptocurrency. And I will try to answer the question, which is written here on my slide. Can you insure cryptocurrencies? Which is a difficult and really complex question. My presentation will have two parts. The first one, I will try to talk about the security of the cryptocurrency. And the second one, I will talk about what is the insurance market doing, and what are the insurance solutions that we could find. The main goal of my presentation is it's mainly to tell you, well, there is some risk when you exchange crypto. As Dominic was saying, this is a high exposed product, and insurance market is trying to develop some insurance solution to protect the owner of cryptocurrency against some risk that we will go and see. On this slide, just a number is that when we start working on this presentation with Anthony and Dominic, the crypto market, the capitalization of the crypto market was 2 trillion. Now it's at 1.3. All that to say is that I will not talk about insurance against the volatility of the cryptocurrency. This is a risk that is not insurable today, so I will not talk about that. It would be too easy. So going on the presentation, first of all, I will talk about the security of the digital asset. So I'm not an expert in IT, but all I know is that when we talked about blockchain, or when we talked about crypto, we all know that the integrity of the data is not an issue. The blockchain is a technology that is safe and secure. I mean, it's not safe, but secure in terms of the data integrity. However, well, cryptocurrency is a valuable asset, and as simple as it is, well, as it's written there, where there is money, people are trying to steal it. This has happened for several years, and this will happen again. And it's not the blockchain or that will avoid that. So coming back to this security, so there is not really centralized data about the crypto hack or the cyber hack or the fraud, but however, I found a really interesting website, and I've put it there. On this website, you could see all the loss, all the claims, all the cyber hack that has happened in the last 4-5 years with the crypto exchange, with the wallet, with the NFT. It's really well listed. It tells you at what time, how much money and etc. has been stolen. Just to summarize, I mean, in the last 3 years, so 2019, 2020, 2021, where you could see on my slide, every year, it's between 4 billion US dollars, it's quite important, to 10 billion US dollars that has been stolen. I'm talking about crypto again. It's not only about fraud, it's not only about cyber hack, it's as well about insolvency, it's as well about, how could I say, scam, financial scam. But out of that, there have been as well some crypto exchange, the one you are using, the one I'm using, that has been as well hacked by cyber attacker or cyber hacker. And here in 2019, for example, we have seen 300 million worth of crypto that has been stolen. In 2020, it was about the same. 2021, the crypto exchange, the centralized one, are getting more and more secure. But we could see that some of the crypto exchange that we call the decentralized one are now the target for cyber attacker. Here on this slide, don't worry, I will not talk to each of them, but you could see a timeline of some of the major hacks that has happened in the past 3 years. I just wanted to come back to a few of them because some of them are quite interesting. First of all, we could see that the winner, if we could say so, the one that has the gold medal, is the famous crypto exchange from Japan, which is called CoinCheck, which has seen, and this is what it's written, so it's not a joke, which has seen 534 million US dollars worth of their crypto, which is called NEM crypto, which still exists, that has been stolen overnight. So basically, the owner of this crypto exchange, they turned the light off on an evening. They came back in the morning. 534 million US dollars has disappeared of crypto. So this was an important one. The Bithumb, it's a Korean crypto exchange, is quite interesting as well. They have suffered 3 hacks in 3 years. So 2017, 2018, 2019. We could say that maybe now they are more secure, I would say. So this was for Bithumb. The one I want to talk a bit about, because it's in Singapore, first of all, and we most of them know it. This is the cyber hack that Dragon X has suffered in 2019. It's quite interesting, this one, and you could read lots of it on internet. This crypto exchange has suffered an attack, apparently from a cyber attacker from North Korea. The North Korean cyber hack attacker are coming quite a lot in the news or in the internet, and they have used some fake LinkedIn profile. They have used a fake website. They have used a fake hot wallet, and they have succeeded after months and months to convince one of the employees to download their fake wallets, which then has allowed, I mean, this is a typical story. This is a phishing. This is basically a phishing, high-level phishing, but still a phishing attack that has then allowed them to access several hot wallets, several private keys, and then they succeed to steal 7 million US dollars. And you have lots of stories like that. So I will not go through all of them. You could read, there is plenty of literacy on that. We could as well see that even though, I mean, in 2022, we all know the crypto.com crypto exchange, the famous Matt Damon one, as well suffered a cyber attack. And it has been told they have lost 30 million US dollars. Okay, so what I would say quickly about this hack on the crypto exchange, the reason of the hack are quite simple. This is either an insider job, that means an employee that has been downloaded a malware or a fake website, or it's a weak IT system, or it's the user lack of security awareness. That's the reason of the hack, but this is not what I want to talk about. What is important is that what I've written on the left side of the slide is that all crypto are targeted, that the cryptocurrency attack are highly complex, and it's a bit like, I would say, a burglar that wants to enter in a house. Even though this house is well protected, at a point, if he really wants to enter the house, he will succeed to enter the house. And one of the other points that is really important and that we have to keep in mind is that crypto exchanges are not regulated. Meaning, unlike, I don't know in Hong Kong, but I know in France, my money that is in the bank, if the bank is going insolvent, if the bank is losing the money, is backed by the state. Crypto exchange, it's not the case. Your money is lost, it's lost. So it's only based on the owner of the crypto exchange that will want or don't want to reimburse the money or the value of your crypto if it's stolen. So what to do? Well, we already talked about that with Anthony. I will not go through that. But what was funny is that I've discussed with lots of my friends that are crypto owners, and I have asked them what do they do to protect themselves. So there is the hot wallet, there is the cold wallet. We talked about that with Anthony. But what was important is that some of them, the ones that have lots of crypto, not me, they use their own, a bit like Anthony was saying with the phone, they use a dedicated laptop. It's a cheap laptop, but they use this dedicated laptop just to deal or to trade the cryptocurrency. And they even go further with this dedicated laptop. Sorry, they create different user and different. So they go on Google Chrome and they create lots of different username. Last but not least, and this is really important, and I put a small chart here, is the password. A strong password is paramount to everything you do on the internet. And you could see here the time it takes to break password if it's only lowercase or if it's higher uppercase, and etc. Okay, 10 minutes, 5 minutes more. I hope everybody is still here. I will go to the last part of my presentation, which is the insurance market, which is more what I'm dealing with. So who says insurance says risk, and we've seen that already. There is I would say there is three main types of risk, not talking about the volatility. Once again, the volatility of the crypto, it's your own business risk, I would say. But there is three types of risk. There is the insolvency of the crypto exchange. We have seen some crypto exchange being insolvent. So once it's insolvent, well, if you have your crypto there, it's a bit complicated to have it back. The other one is the financial scam. We have seen some ICO there that was just, I mean, leaving people without none of their money. And the third risk is what we will call the fraud, the broken external drive where you have your private key, so the cold wallet, the cyber hack. So this is what I will talk about, and this is where the insurance could come into play. So I will not go, I mean, I will try to be as simple as possible, but where the insurance is today, the insurance for crypto or even NFT, but NFT it's even far apart. But on the crypto side, there is two things that the insurance industry is facing today. The first one is that blockchain is a new technology. And as Dominic was saying, the law is slow, so are the insurers. They are far behind the IT people, basically. So they don't, I mean, they are not able to assess the blockchain risk at the moment. And another challenge that they are facing is that there is not enough data. Insurers, to price a risk, they need the data. They need to know how many losses you will have per year, so which is called the frequency, and they will need to know how big will be the losses, which is the severity. Without these two data, it's really difficult for them to price a risk or to assess a risk. But they are another way, so they are trying to do it another way. They are trying to do it by taking experience on other type of insurance or other type of asset, and they copy it and paste it, but not with the same success. Before going on the type of insurance, just three things that are for me insurance broker important is that the insurance has three roles. The main one and the one that we know is the risk transfer. That means if I lose my car or my house, the insurance company will reimburse the money, the value of the car. I mean, normally. So this is the first role, but there is as well another role that is important. This is the risk mitigation. By that, I want to say that all the time the insurance came into an industry, this industry has made more effort in terms of safety, security, and etc., etc. The same way, for example, the commercial center were built without a sprinkler, you know, this automatic fire extinguisher. Well, now if you go everywhere, you have a sprinkler in every commercial center or every tall building. And the last role of the insurance, this is the marketing. It's important now to say that, well, if you give me your goods, they will be well secure and they will be well insured. Okay, so having said that, and I see that the time is running fast, there is mostly two types of insurance to insure the cryptocurrency, the value of the cryptocurrency. There is the crime insurance, and this crime insurance will cover the crypto against the fraud. And there is the species insurance. The species insurance is the insurance that you usually use to insure a work of art, some wine, expensive wine that you have in a special place. So the species insurance will insure goods at rest. So here they will be applied, the species insurance will be applied for the cold wallet, your external drive that you put somewhere. Well, if it breaks, if you lost it or if it's stolen, the species insurance will be able to reimburse the value of what you have in your external drive, which will be the loss of the private key that gives access to your crypto. I've put the rates. It's really expensive at the moment, which is normal because insurers are not able to assess properly the risk. For the crime insurance, it has been said that the rates are between 3 and 5, which is huge. And for the species insurance, it's above 1 to 2%, so which is important as well. But I guess they will decrease. The more we'll go, the more they will decrease. I want to say that today, the insurance capacity in the market, it's only 1 billion. So if you compare to the crypto capitalization, it's really small. Just a quick word about cyber risk insurance. Cyber risk insurance, it's not to protect the value of the crypto. It's to protect the value of your IT network, but not the value of the crypto. I'm going quick. I hope I've been clear, but if it's not, don't hesitate to call me. Quickly now, when I was talking about marketing, the role of insurance that is the marketing, well, we could see more and more in the most famous crypto exchange that they are now advertising, saying that their crypto is insured. How it's insured, we don't know, but they are starting to discuss about that and to market this as an added value. And I've put here on this slide a link, an article that I find really interesting by the CEO, the Chief Operating Officer of Coinbase, that is saying why they have put insurance in place, what it means for them. So if you want to know more, I would really advise you I would really suggest you to read what it's written there. That's it for sorry, I'm going quick. The last part to conclude, really quickly, I would say the cryptocurrency market, it's a growing market. We have 300 million users today for sure. Even though this is a really volatile market, it will grow. There are lots of risks. This is a highly risky industry. We all agree to say. You need to set up some risk management measure if you have some crypto. This is a must to have. And then the insurance, I would say, is coming. It's not ready yet, but it's coming. That's it for me. I hope I've been a bit more than 15 minutes. Sorry for that. I hope I've been clear despite my French accent. And if you have questions, well, don't hesitate. I would be more than happy to answer them. Thank you so much.
Thank you, Laurent. So now we will move on to our next section and invite our moderator, Donald. Donald is the vice chairman of WTIA. He will host the panel discussion with our speakers, Dominic, Anthony, and Laurent. So if anyone have any questions, would like to ask any of our speakers, you can feel free to type in the chat box. So we will take some time for the questions. So I will pass the time to Donald right now.
Hi, everyone. I think everyone can hear me clearly. If not, just raise your hand. So let me introduce myself. I'm Donald, the vice chairman of WTIA. I'm glad to see three of the very good speakers today. And I'm quite an idiot on insurance, on crypto security. And to start with, why not I roughly split three of the speakers. Like I think from Dominic will be more on the legal perspective, and I definitely have quite a number of questions in mind that I would like to talk to Dominic. And as Anthony will be more on the security side, and then Lahore will be more on the insurance side, if I'm not mistaken. So why not I start from Dominic, from the lawyer. But anyone, please keep it interactive. If you have any questions among the speakers, feel free to chip in comments and make it more interactive. Actually, my first questions to Dominic will be, I'm not very clear. It's like I heard about Dominic, what you talk is like NFT may consist of copywriting, trademark, and also right of publicity. So this is what you have just told me, and I just learned on this part. But say, for example, if I have a case like I bought an NFT, for case number one, the simplest version is like I bought an NFT with a BAYC pictures, which is on the NFT. Can I reprint or make it on my T-shirt, and then I wear the T-shirt somewhere, anywhere? So am I owning the rights of reprinting, reproducing on other physical merchandise? Is that possible?
Thanks, Donald. I think on all these rights, it's again, as I said in my presentation, it's all on the contract that governs the NFT that one purchases. So it's possible that you might have actually all the rights, but then if I'm not mistaken, sometimes the original author or the creator of that particular NFT or digital art, it's really up to that person whether they are selling outright or let's say all the copyrights, or actually they can reserve some of the rights. So it's all depends on whether they have outright sold all the rights and set it out, and then of course then you can have the rights. Let's say if it is the copyright, it's not just owning the thing, and then you can do it like what you said, you can do it in reprinting on a T-shirt or whatever. But the thing is, I mentioned there are certain, sometimes the author might have reserved certain rights. So if they reserved the rights that say, for example, you can only use the right for non-commercial matters, and then they carve it to say that, well, but okay, you can also do it for commercial matters, but you might need to actually, depending on your revenue or income out of that usage, you need to pay them something. So there could be this kind of restriction or carved out rights. So you need to be careful in terms of going back into looking at the actual terms and conditions of the contract. But I'm also very new into this, but sometimes even if you look at things like just taking a kind of general understanding usage. For example, sometimes you do online purchase, right? You use a certain platform, for example, like Amazon or whatever, Taobao, or okay, right? You use it, right? But you don't really go into the details of the terms and conditions.
Exactly.
So because you don't need actually go into any problem, so no one bothers. But if you go into the terms and conditions, actually there might have been some restrictions on how you're going to deal with certain things, or if certain problems come up, or if you incur certain loss, or maybe even on this kind of platform, there could be scammers, right? I mean, they on Facebook, you can have someone selling something, but actually my wife just got scammed, and she was trying to buy some cookies, and she thought that it was the real brand, but actually after she paid, it was not the real brand. The seller disappeared. And so when you go into certain, sometimes all these platforms, they might have some certain terms and conditions that you might say that, well, how come they themselves are not responsible or partly responsible because they let this bad seller use their platform. But then if you go into the terms and conditions, they might have said that, well, actually you can't claim that. We have limited our liability. And in some of the platforms, I'm not saying just e-commerce platform. And sometimes if you go onto some payment platforms, when they say that all our policies are here in this terms and conditions kind of section that you can click on. And sometimes I click on and actually there's nothing there. So what have you bought? I mean, no one has gone into that terms and conditions of the NFT, for example. I mean, there might be some terms and conditions on that platform, but you haven't gone into that. And are you sure that you have those terms and conditions? And what are those terms and conditions? So it's very important to go into that. And one thing about, I mentioned about copyright and trademark. Now, trademark is something different. Now, I'm not an IP lawyer, but my understanding is that trademark talks about the origin of the brand, so that when you buy a certain brand, so that comes with a certain kind of confidence in the quality, in the manufacturing, production, and even in terms of ethics, right? They don't use child labor. You have trust in that brand, and they use all the products or the materials are from clean source or whatever. And so that's where they're coming from. They have registered a trademark. But if you put that in the NFT without the right, now, of course, you can have the right to do that from the trademark owner. That is also an IP right, a property right that you can actually also sell it or license. But usually it's licensed, right? Because they own the trademark. So you're able to get a license right. That license right is only probably limited to maybe one layer or one level, but whether you can pass it on to the next one, if you're going to resell it or do something with it, there might be a lot of restrictions on that. It's kind of like, I suppose, like when you have IT products, right? Your software, these are all just licenses where you can use it, but whether you can further use it or profit from that, that might be restricted. So in terms of the, of course, these are still very new things, and there are still cases going on in different jurisdictions as to the original trademark owner is saying that, well, you shouldn't put our mark in your NFT because it is actually our trademark. But the author might be saying that, well, no, actually it's just a look-alike or a avatar of the original thing. And they try to say that, well, it's not the original thing, therefore I'm not infringing a trademark, and therefore I can put it in an NFT and further sell it at the whatever extreme price. And of course, whether that is really something that is, as the NFT owner or minter say, or as the trademark owner say, that is still being actually in court being debated. So we have to wait and see what's the ultimate outcome. And of course, these kind of things, as I mentioned, or Laurent has mentioned, the law is always on catching up, and even for the courts, they can only use some kind of general principles, applying what is in the real life, kind of things that we say, how do we define things like what is a property, what are the rights, what are user right, what is license. Now, whether that is exactly what is stated in the terms and conditions of the NFT smart contract, no one knows, right? And also another thing is whether I mentioned whether it is governed by which law and which jurisdiction. That actually also complicate the matter. So all I can say is that, well, if you think that you buy the thing and it comes with all the rights, then of course you can just go ahead. But if it turns out to be a really expensive transaction, then you better check it, because as I say, the other side might then come back and say that, well, I thought I give you that much money is to have all the rights. And one thing you also need to be careful as to whether you are really buying the NFT or are you just buying the JPEG. Is it just a photo or the actual NFT that you're buying? I mean, there could be scammers, right? Pretending that they're selling you the NFT, but you don't know. And you just bought something that you thought, well, it's like a digital image, right? But that's not the NFT, that's just the JPEG file.
So it seems like, I mean, reading the details and the terms and conditions on what you have bought will be very, very important. But it would be very difficult for the general public, a layman, to read all these details. Even myself, honestly, if I get the NFT, I don't even know how many rights behind that I can claim, or which I don't really know how to say, because I don't understand how many different rights I need to be considered sometimes,
Yeah.
right? I just know I have paid something.
I think it really depends on how you're going to use that. If you are just, not really going to use that as a kind of investments or going to resell that, then of course that might not be that much of an issue. But if you're going to say that, or originally that is a very valuable thing, then it's kind of like doing a due diligence, right? You want to buy a Qing Dynasty or Ming Dynasty artifact, and then you make sure that you're buying the real thing, right? Then you get some expert to go and have a check or do a due diligence. So you might get Anthony or Laurent, or maybe there's some valuer, and then can go or maybe even a lawyer to make sure that will help you to check the terms and conditions. So that might be one way of doing that. But of course, if you are not really going to bother with that, or the amount isn't worth it, then why spend the money?
Yeah, understand. Yeah, I think I actually have another question, but I'll ask you after. I want to check with Lohan on a related what actually Dominic have just mentioned. Actually, the market is not really regulated. I think Lohan, you also mentioned this as well. Say crypto exchange is really not regulated, honestly. So in that case, let's say there's an NFT or a cryptocurrency. Actually, I bought this, right? And eventually, actually, this is not regulated. And so how insurance actually price, because if it is regulated, I think you can easily price the insurance policy. At least something is regulated. But if it is not even regulated, as an end user, I don't know how much premium I need to pay for the insurance policy, and how you can even price the insurance policy if it's not regulated. It's basically, no one really have a law on this, right? So I don't know how to ask. I don't even know how much should I pay. I don't know.
Well, that's a really good question. It's not only about being regulated or not for the insurer. I mean, of course, it could be better, but this is not only about that. This is mostly about the fact that they don't really know. I mean, all the time you have a crypto that is, you have 15,000 cryptocurrency today, or more than 15,000. So of course, it's really difficult to read, for the insurer to read each and every white book that the crypto owner or the crypto founder is editing. So they could not do that. So they could not assess the risk of each and every crypto, or each and every crypto exchange as well. This is the same. So I would say, to answer your question, they are doing by analogy, on the crime insurance, on the species insurance. For the species insurance, they say, well, I have a bottle of wine in my cellar, it will cost that, so I will do the same with the external drive that I have, even though it's not the same. For the crime, it's a bit the same. They have data on the bank, on some IT company that has been hacked, so they are a bit doing the same, but the capacity they are giving at the moment is so low that it's not enough anyway. Don't know if I have answered the question, but yeah, this is really difficult for the insurer to insure, first of all, because the insurer doesn't want to insure crypto at the moment, but they do it, but just for some of it, for some of the leader, and if they do so, it's still expensive. I mean, there is a way of doing it, but it's still expensive. Hope I have answered the question.
Can I just comment on the regulation part? Because Laurent is correct saying that Hong Kong, generally, we don't have any regulation on crypto exchanges, but there's an opt-in arrangement for the time being. And I think out of the many exchanges now, there are only 2 that have got a license. But the SFC is going to regulate this as the virtual asset service provider regime. And there will be law coming out to regulate exchanges if they are offering this to Hong Kong people. So that is coming on. So maybe once the regime is and the law is there, maybe it would be easier to maybe even for the insurance community to then come to some kind of maybe products that are targeted to, say, cryptos, for example, that are being traded in regulated exchanges, because I'm sure the regulator will sell out all these, like whatever brokerage firm or securities firm that are now doing in Hong Kong, where you need to have a lot of policies, your IT infrastructure, IT security would be up to a certain standard. You need to use MFA, two-factor authentication, whatever. So maybe when that comes, I understand that there should be some legislation coming in, coming this year. So hopefully by then the whole ecosystem would be kind of more, well, I hope there will not be too, well, it should be regulated in my view, but not too regulated to kind of hinder people from trying to, you know, come up with new things to do business and use this kind of DeFi. Yeah, thank you.
So, but by the way, I'm not very familiar with insurance on the crypto. So, Lo Ho, do you have a real example that, let's say, it happened in Hong Kong? Is there a claim on some sort of losing the crypto and successfully, you know, get back the money or whatever? Is that happened?
Well, so in Hong Kong, no. I mean, anyway, crypto now, it's all over the world, so I don't know. I mean, they have some crypto exchange today, as I was saying, or what we call now the warm wallet. Coinbase is a warm wallet, has some insurance in place.
Okay.
So, but as all the time, right? Insurance are insuring risks that are secure and safe. So I'm not sure the ones that are insured are the ones that are the more risky business. So I mean, claims on the crypto, good question. Good question. This is, I would say that I'm not aware of. I know that some crypto exchanges are insured for a certain limit. They are not insured for the full value. But there is so many as well. There is lots of issue if you have a claim, because the cryptocurrency are so volatile that you underwrite the risk at a point where the Bitcoin is, I don't know, $13,000 US, but then after it will be $40,000 US, or maybe even less. So what do you insure? Today the insurance company are not able to say, well, you insure 2 Bitcoin, I will give you back 2 Bitcoin. They will give back US dollar. So anyway, there is lots of question. Insurance companies is working on that. In UK, they are working on that. In US, they are working on that. It hasn't come down yet to Hong Kong.
Okay. So meaning that maybe Hong Kong is a bit, it's not that advanced, I guess, or the market is not that big enough to attract you to.
Well, it should be, because Hong Kong has all the time been advanced on the crypto. You have, I mean, I forgot, but one of the biggest crypto exchange has been set up in Hong Kong, right? So I mean, with the Polish guy, I don't remember him. He's in Singapore now. I forgot. He's one of the biggest crypto exchange. Anyway, maybe Anthony knows him. But so crypto has all the time been, I mean, Hong Kong has all the time been a big place for cryptocurrency. I'm not an expert, but this is what I think. You have lots of experts in crypto. Singapore, you have lots of crypto exchange as well. Korea as well. So it should come. But yeah, first of all, I guess this is mainly the headquarters of the company that are studying the risk. Lloyd's is famous to be the first to insure the risk that are not insurable somewhere else. So it's a bit natural. It's not that Hong Kong is behind. It's just the same as usual. It will come quick, I guess.
Okay. So let's say at this moment, say for example, if individuals, right, not a corporates, right, say if they own, I don't know, 10,000 of Bitcoins, whatever, so they have reached, right? Is there a chance that these individuals can approach you to get a personal insurance of their wallet, of their Bitcoin? That's not possible.
I wish.
Okay.
But so if I may anticipate on that, I think what will happen in the future is that but it's not yet done. So what the crypto exchange are doing now, they say, I mean, we have seen it. Some say we are insured, either we are self-insured or we have placed a line somewhere. So they say we are insured, and if something happens, we will give you back some money. But they are not asking you to pay something. What I think maybe in the future is that some crypto exchange will say, like a bit like if you buy a flight ticket, for example. If you buy a flight ticket, you all the time have the option to buy a travel insurance. Or if you buy a if you buy a car, a Mercedes in Hong Kong, the dealer will tell you, do you want an insurance as well? Well, I guess maybe in the future, the crypto exchange will say, well, if you buy some crypto through my exchange, you have the option to buy an insurance, which is either a species insurance or a crime insurance, to make sure that if I'm hacked, you will get reimbursed. So maybe it will come this way. But at the moment, no. Individual could, I mean, not I'm aware of, individual unfortunately could not buy insurance for their crypto. But I mean, yeah, it's
so here just
yes, Anthony, please.
But so here just at one point is there are some cons or some token that enabling peer-to-peer risk underwriting, meaning Donald, you can insurance, so you can, I mean, earn some interest for the premium that I pay, and if there are incidents, I can claim and take the investment that Donald had put in. So the DeFi area has DeFi insurance. There is a few cons that are mutual, and in Singapore there's I forgot the exact name, but it exists, and the DeFi actually peer-to-peer risk underwriting in computer and in crypto is a very good way to diversify the risk. Okay, so because insurance is about pool. I mean, when we work on insurance, it's about risk pool. It's about sharing the risk. And when the pool is getting big enough, everyone's has a incentive to price to, and this is something that in crypto world that has happening, but obviously it is not for non-risk professionals. You need to understand quite a lot about risk underwriting. That part is still take a lot of learning. It is not a very straightforward investment.
Okay, understand. Actually, I just want to know, is there any tricks that I can buy some insurance to prevent the incidence of losing of my Luna, depreciation of the Luna? But seems not, you don't sell it to any individuals, right? So, okay, it's a dream, maybe it happens later. So I have a question for Anthony. You talk about the hot wallet stake code, right? So I believe many of us knows that what is cold wallet, what is hot wallet. But then why not I choose a hardware wallet, which is 100% safe? I guess I'm not sure is that 100% safe, right? But why I need to choose a hot wallet stake code rather than I just get a cold wallet or
I think we have heard supply chain attack, meaning the attacker is focused on compromising the wallet manufacturer. So, and it happened once. Because obviously, the hacker is able to crack or to attack the news that happened before its ledger. So it has been incident of, the manufacturer having hacked, because everyone knows if you're able to compromise the manufacturer's IT and get to the device fault or bug, and you're able to compromise a very high volume of reward. It's billions. So that means a supply chain attack is obviously happening. And if you rely on all different types of wallet manufacturers, although there are some major, market share leader, at the end, you should not put all your assets in one manufacturer, and because it happens before. And I think the cold wallet or the hardware wallet is still has some user experience fault, because at the moment it still requires you to work with a device, either phone or a computer to transact. Okay, so if you want to trade, want to exchange the Bitcoin or whatever cryptocurrency, you still need to put it online, and that part, it is still a issue, because when you put it doing the transaction side, it is your computer that at risk. So we think you should have one computer, as the Hon just say, a dedicated machine, dedicated phone for the purpose of trading and keeping this value. And when you are required to do the transactions, and then you connect it online to a secure network and only do it with that. And I put the word as poor man's wallet, because everyone has a second, old phone, or you do not need the latest model, as long as it's able to install the app and have the Wi-Fi connections using our DNS whitelist thing, then you're protected, and the likelihood of getting all these compromised with your phone, with our DNS protection, and with the wallet is very low, because obviously it's not bulletproof. I won't say, but it is a balanced approach. I would suggest, putting the money to buy hardware wallet, it may be a few thousand or a few hundred US dollars. Put it into buying an insurance. Then you are covered. Then your cover is more comprehensive. You had different. You had the insurance part to cover the real loss, and you had your own IT and using the phone, using our network protection DNS whitelist to protect the network. And that's everything is a more comprehensive, balanced approach, rather than just buy a hardware wallet and hope the manufacturer is secure.
But Aloha is saying that we are not welcome individuals to get insurance, so we cannot save the money to buy insurance.
The second part is about the decentralized insurance part, that you can buy the coins, and so you cannot go to a current, existing MMC insurer to do that, but you can do it online.
On the online, the DeFi.
Yes.
I see. And actually, some of my friends, is a very layman person. He's asking me a question, but I think from the expert, I want some expert advice from you as well. Is there any difference actually to, let's say, to purchase the crypto through the phone, let's say through the I don't know, MetaMask, whatever, on the mobile phone, rather than through a laptop connecting to the web version of the Metaverse, say for example? Is there any difference in terms of security, or I don't know, any hacker is more active on the online or on your mobile? Which way is safer, or is it actually the same?
I think the part is the safe is about the person. Usually the scam and everything happens is the person. If the person is what we call impatient, or would like to do quick transaction, take quick money, they are more easier to subject to scam and this kind of attack. So if you're talking about cyber attack on mobile, so if you keep your mobile device up to date to latest versions, the risk is lower. Obviously, the chance of getting compromised, by recent website is lower, because at the end, PC or other type of desktop device has much more what we call software installed. So the code base is bigger. So if you're talking about theoretically, that is the PC has more chance to get compromised, to have malware installed. But on your phone, if you follow the updated software and do not install unnecessary apps, mobile apps, then is rather safe there.
Okay. So let's say in the laptop, do we need to install some sort of antivirus or whatever software, just like a normal computer, right? We need to upgrade or update with antivirus, right?
Yes, sure. I mean, I won't suggest anyone to store high value, maybe over 100K value on a computer without some cyber protection. But as I say in the slide, the antivirus only effective when the virus touch your computer, because the antivirus is a software operating on your computer. So the virus must come to your CD, come to your disk, come to your memory, and then active on your computer. Then the antivirus is able to catch it and to quarantine it. So that may be too late. Okay, so what nowadays the protection and the defense is moved to the network. Okay, so you stop it before the virus touch your PC. That is more safe and it able to stop a pseudo attack.
I see. Okay, great. So a general questions to all of you is like, we often heard about, let's say if someone hacked our wallet, our crypto has been stolen. Is there any other ways that we can get back the money in terms of from the regulatory point of view, or is there any security software that we can trace back who's stolen my stuff, that we can trace it back and get it back, or is it no way, lost is lost, no regulation, sorry? Or maybe from Dominic.
I suppose the difficulty is that at the moment there are not really many laws or regulations on the subject. But of course, I mean, if like anything else, if you lost something or if something is stolen, you can try to get the usual ways are two ways. One is to get the police, the law enforcement to try to help to get the criminals. And the other way is try to do it by way of civil litigation. If you're able to identify the culprit, the fraudster, the scammers. But there lies the difficulty. I mean, all these are, even though, as I understand, are recorded because it's on the blockchain, right? Even if you have stolen and then transferred to the next one, it's all recorded. The thing is whether you're able to try to identify those following the loss of your crypto or wallet, and then try to identify them to be able to pursue them. So that's the same difficulty for law enforcement regulators or the victims. And even for lawyers, we can only do so much as to what we are given as to, like, are we able to identify and trace to a certain point where we are able to then sue the person for recovery. Or like what the case I mentioned, apply to the court for an asset freezing order to freeze that particular digital asset. Now, if you're able to do that, then there might be a chance, but still there would be a lot of difficulties. And for the time being, that part of the difficulty might not be easily overcome. You're talking about a lot of technical things, even though that might be available on the market as to tracing all this data and try to also identify all this may not be actually anonymized, like with a name, but you might, let's say, even if you're able to identify that person or company, that might take you a lot of time and cost. That's only the first part, right? And then you got the data, and then you need to prove that and bring the case. So that also takes time and cost if you're doing it by way of getting a lawyer to do that. If you're going to the police, let's say, and then of course the police would say that, well, okay, is this person in Hong Kong? If it's not, then that might be an issue, right? Whether they can get overseas law enforcement. Sometimes they can do that. They have cooperation, but not every single case. My experience is that sometimes if you're talking about really, really big cases, they might do that, but they have limited resources, and people can be scammed with like just the equivalent of maybe a few thousand US dollars value. That probably might not be able to get the whole force to help you. Not to mention about different countries. About the whoever have stolen your wallet or scammed your crypto, they are not in Hong Kong. So I think theoretically it's possible, but then practically, realistically, that might not be that easy.
Yeah, I understand. But so seems like if Dominic is saying this, so more important will be from Anthony. We need to dedicate a computer or a laptop.
No, actually, I think we need insurance, but then unfortunately we don't have that yet.
Yeah, definitely. So Lo Ho, that will be your role to promote to us in Hong Kong eventually. I think we need this until this can be popular in Hong Kong, I guess. So Anthony, do you have anything you want to share as well, in particular, what software or anything that we need to install in that hot wallet but keep cold? So I think that is important.
But that part does not help if that incident already happened. When the incident happens, tracing the addresses and coming to different exchange may help. And if you're able to get the exchange to respond and to work with you on frozen the wallet, that may help. But I would say that is a very tedious job that you need to do it. Very convincingly, so that exchange can follow your fraud, and then so the part about the current crypto is that there are so many exchanges. Some of the exchange is just don't keep record, and when the money is really go to that wallet, or that the trail is lost. I have read some analysis. You're able to trade. The victim is able to trace the wallet address, but they come to one of this exchange, then the trail, the money trail is lost. So that part, in the future, maybe we will see some sort of advanced alliance, just like what the anti-money laundering law or anti-money laundering alliance with the banks, that they will exchange information and sanction or stop those payments. And I think with the insurance part, the insurance may not be able to give you back the losses, but it may help you to do the forensic side. So you can, they will provide the forensic expert to analyze the scenarios, the deals, and try to find out why or who did that to you or your device. And that part is important because it's to stop you from, stop the device from happening again. And that part, I think it is something that we should, consider the insurance.
Okay, great. So I think thanks three speakers today for your time. But then because of the time, I didn't see. Kylie, I didn't see any questions. So should I just leave it? Up to now, and then I sort of like pass the time back to Kylie and see. I know Kylie may have some notes to the audience, right? Kylie, do you have something to share with every one of us?
Just a quick roundup. So I think if our participants has any questions to our speakers, they can reach them directly later, maybe. Right? Yep. So thank you, Donald. So I think it's a quick roundup. I would like to thank you again to our speakers, Dominic, Anthony, and Lo Hong. And also thank you again, Donald, for being the moderator of the free webinars already, right? So, and also thank you everyone for joining the webinar today. We appreciate you being here. We are always recruiting new members to join our community. So if you would like to join our community or know more about our membership details, feel free to reach me. Thank you and have a nice evening.
Thank you.
Okay, thank you, everyone.
Thank you so much.
Okay.
Bye-bye.
Thank
Bye-bye.
you.
Bye.
Thanks, everyone.
Thank you.
Okay.
Bye.
Bye.
Bye.